Let us start with today's lecture. We are going to again solve some of the questions of capital budgeting. This question particularly is a very huge question, will take normally 40 to 45 minutes to solve manually. We are going to solve it in MS Excel. So as a student, what you need to do is you need not do it along with me. This will be your homework. After going to home, you need to do it again. So you just need to watch how I am solving it. PD Limited, an existing company, is planning to introduce a new product with a project life of 8 years. Project cost will be 2 crore 40 lakhs rupees. At the end of 8 years, no residual value will be realized. Working capital is 30 lakhs will be needed. The 100% capacity of the project is 2 lakh units per annum. So you can manufacture and sell 2 lakhs units per annum. But the production and sales volume is expected to be as under. So not all the company works on 100% capacity because of public demand. Number of units that will be manufactured in year 1 is 60,000, year 2 is 80,000. Year 3, 4 and 5. This does not mean year 3 to 5 it will be total 1,40,000. It means the 3rd, 4th and 5th year, every year the sales and manufacturing will be 1,40,000. 6, 7 and 8 years will be 1,20,000 units. So now you will have to draw all 8 columns 1, 2, 3, 4, 5, 6, 7, 8. Other information. Selling price per unit is 200. Variable cost is 40% of sales. Fixed cost per annum is 30 lakhs. And the advertisement expenditure is also given in a separate manner. Income tax is 25%. Straight line method of depreciation is permissible for tax purpose. So SLM method I will be using it. Cost of capital is 10%. Assume that loss cannot be carried forward. I will explain you this. Assume that loss cannot be carried forward. This is related to income tax. Present value of 10% is so and so respectively. Advice about the project acceptability. So what we need to do is for first 8 years, we will be finding out sales, variable cost. I will be getting profit. I will try to convert it into cash flow. I will find out present value of cash inflow minus present value of cash outflow. I will be getting answer of NPV. If NPV is positive, I will accept the project. Otherwise, I will reject the project. Sir, what is difficult point in this question? There is nothing difficult except the sum is very much lengthy. I will be solving it in Excel, so it will become somewhat easy for me. So you need to keep your question open. Now question is not on the screen. What is the sales for 1 to 8 years? It is given sales of first year is 60,000. Second year is 80,000. Third, fourth and fifth is 1,40,000. It is third, fourth and fifth 1,40,000. 6, 7 and 8 1,20,000. This is sales unit. This is 1,40,000 and 6, 7 and 8 is 1,20,000. How to find out contribution? It is sales minus variable cost is contribution. Or I can even do this. Sales multiplied by contribution per unit. This will also give me same answer. Now what is contribution per unit? What is selling price per unit given? Selling price per unit given is 200. And variable cost is 40% of sales. So variable cost per unit will be 40% of this is 80. So contribution per unit will be is equal to 120. Contribution per unit is 120. Right. So how to find out total contribution? Number of units sold multiplied by contribution per unit. Sir, if you want to find out total contribution by finding out the sales minus total variable cost, you will be getting same answer. I have done contribution per unit and now I am multiplying it with sales figure. So I am having sales unit. I know contribution per unit is 120. So I can just do this column multiplied by 120. I will be getting answer of contribution for all 8 years. What I have done? I have done this column multiplied by 120, which is contribution per unit. This column. Contribution per unit. This is a incorrect column, right? I can directly find out total contribution. How? Is equal to this column multiplied by 120. It remains 120 every year, so you don't need to make a column for contribution per unit. What is fixed cost given in the question? You need to see the question. Fixed cost per annum is 30 lakhs. So every year fixed cost per annum remains same, which is 30 lakhs. And every year it remains same, so every year the fixed cost will be 30 lakhs. There is also a column of other expenditure. If I can say it. This is other expenditure. In addition to this, advertisement expenditure will have to be incurred. First year expenditure is 50 lakhs. First year other expenditure is 50 lakhs. Second year other expenditure is 25 lakhs. Three to 5 years it is 10 lakhs. And 6 to 8 it is again 5 lakhs. So these are other expenditures given in the question. Assume how much time it will take to you for you to write down all this. So you will have to prepare 8 columns. In all 8 columns, you will have to write down these figures. Let us go to depreciation. We will have to calculate depreciation from given question. The total cost, project cost will be 2 crore 40 lakhs. Minus no residual value is 0 divided by 8. Straight line method of depreciation is permissible as far as income tax is concerned. It will be 30 lakhs rupees. Now 30 lakhs rupees will be every year depreciation. So every year depreciation will be 30 lakhs. What will be written down value at the end of 8th year? I have taught you this. If you follow straight line method, your written down value will be equal to scrap value. So there will be no capital gain or capital loss which you will have to consider. Why we are considering depreciation? To find out correct tax rate. Now let us go to this. I want to find out profit before tax. So what I will do? Contribution minus fixed cost minus other expense minus depreciation will be nothing but profit before tax. I can also say it is total cost minus fixed minus other expense minus depreciation. So this column will be equal to total contribution minus fixed cost minus other expenditure minus depreciation. This is my profit before tax. Now this is my profit before tax. See, the first year profit before tax for first year is negative. So what would be tax if the profit is negative? 0. Yes. Sir, if there is a negative profit, we will have to consider tax benefit. Agreed, we should consider tax benefit. But try to understand what is happening. Whenever you are having a loss, you get a tax benefit. How? You might be having other income on which you will have to pay less tax. But it is nowhere written in the question. But one thing is written. Assume that loss cannot be carried forward. Now you will feel, sir, it is a very new concept. But believe me, when you do your income tax subject, this will become very easy. What does it mean? Whenever there is a loss, say of current year, loss is 100 rupees. How it will give you tax benefit? In next year, when you earn a profit of 400 rupees, you will not have to pay tax of 400 rupees. This loss can be carried forward. This is a loss. Last year I have incurred a loss of 100 rupees. Current year I am having a profit of 400 rupees. This loss will be allowed to be deducted for me. This is 300 and say my tax rate is 40%. Now I will pay 40% on 300 rupees and not on 400 rupees. What does this mean? 100 rupees loss is allowed to be carried forward to me. Last year there was loss. It can be carried forward in current year. If current year there is a loss, it can be carried forward to next year. But in this question, it is clearly written that assume that a loss cannot be carried forward. So in current year, tax will be 0. But this loss cannot be carried forward in next year. So next year I will pay normal tax. What is the income of current year is 11 lakhs and the tax rate is 25%. So income tax will be 25% of this is equal to this multiplied by 0.25. It is 27,500 and it will remain 25% for all years. Now there is no negative figure, right? So this will be also this column multiplied by what I have done, profit before tax multiplied by 25%. In first year I have written 0 just because there is a loss. I will not have to pay tax and that loss is not going to give me any tax benefit. So I am even not considering tax benefit because there is a hint given in the question that loss cannot be carried forward. So this is how tax is found out. Profit after tax is very easy. It is profit before tax minus taxation will be profit after tax. In first year the answer will be negative. In all other years answer is positive. All right. Working capital. There is a concept of working capital. We have done working capital. Working capital is cash outflow for 0 year and it is a cash inflow in last year. What is my working capital? 30 lakhs rupees will be cash outflow in 0 year. Let me do 0 year over here. It is cash outflow at the end of 0 year will be 30 lakhs. it will be cash inflow at the end of 8th year. So at the end of 8th year, there will be cash inflow, and there will be cash inflow of how much? 30 lakhs positive. Working capital will not be affected at any point of time, other time. So working capital for all other years remains 0. Working capital is cash outflow at the end of 0 year, and it is cash inflow at the end of last year. Last cash flows will be is equal to this column plus this column. These are my cash flow. Other all years it will remain same. Just the last year there will be 30 lakhs rupees addition in my cash flow. All right. Now, what is the present value of cash inflow? This column. Present value of all this cash flow, including this negative 38 lakhs. All this cash flow at what rate? What is the cost of capital? Is 10%. All right. So I'm just finding out present value. You need to find out present value of all 8 years in your calculator. I can do it once I'm having MS Excel. I can do it easily. It is NPV in the bracket. Rate is, what was the rate? 10%. Yes, all right. So it is a 10%, comma, of all this. It is 2 crore 28 lakh 81,905 rupees. All right. This is my present value of cash inflow. What is present value of cash outflow? Number 1, working capital, which I have written it over here. Number 2, at what rate I will be purchasing the machinery? 2 crore 40 lakhs. 2 crore 40 lakhs. 2 crore 40 lakhs plus 30 lakhs is 2 crore 70 lakhs. 2 crore 70 lakhs will be my present value of cash outflow. 2 crore it is a 2 crore 70. My NPV will be hence this minus this is minus 40. Right. I have made some mistake, I remember. Exactly. What is the mistake? I have not added the depreciation, right, for finding out cash flow. So how to find out this cash flow? See, this is a benefit in Excel. I don't have to change everything. How I am finding out cash flow is equal to profit after tax plus depreciation. Depreciation added back, I have forgotten. I have deducted it, but I have not added back. Plus this working capital column. So what I have done? Profit after tax plus depreciation plus working capital column will give me my cash flows. And this will change all the answers, and my answer will be a correct answer. All right. Present value of cash inflow. What was my mistake? I have not added depreciation. Once I add depreciation, I will be getting correct cash flow. Present value of cash inflow is 3 crore 88 lakhs, and present value of cash outflow is 270 lakhs, and my NPV is 1 crore 18 lakh 86,683.98. This is how I do a capital budgeting question in your MS Excel. Yes, in examination MS Excel is not available, but in real life, whenever you are taking any decision, any capital budgeting decision, you will not be writing down all the figures. Some tips for examination. Please try to concentrate. This question, if asked in examination, is not difficult, but will take lots and lots of your time. if I am in your place, third, fourth and fifth year should be done together. So how I'll be writing down the columns heading? First year, second year, third, fourth and fifth will be my third column. And 6, 7, 8 will be my fourth column. So instead of 8 columns, I'll be preparing only 4 columns. Also, sir, in 8th year, there is this cash inflow. This should be treated separately. You can find out present value of this 8 lakhs and add it to your present value of cash inflow. Otherwise, this all figures are remaining same. So how I read on the columns heading is, if I was in your place, I would have written it in this manner. That is first year, second year, third, fourth and fifth year total, 6th, 7th and 8th year together, not total but together. Sorry. At the time of finding out present value, you will have to use your brain and you need to find it out logically. Because suppose this figure is, what is the figure of third, fourth and fifth year is 10 lakh 35,000, right? 10 lakh 35,000. So third, fourth and fifth year, the figure will come 10 lakh 45,000. Now you need to understand this is not a total figure of third, fourth and fifth year. Every year there is a cash flow of third, fourth and fifth year. Very helpful in your exam, in your suggested also it is solved in this manner. So you can just see one time what they have done, why they have taken third, fourth and fifth year together. Sometimes also people do this. They take 8th year separately because there will be working capital release and other points, scrap value if there is a scrap value in last year. So they might keep last year's column separate and other columns which are same, they may combine it. This is question number 3rd of our classwork. Let us go to next question. It is 5.1.6. Now you need to solve along with me. Five point 1.6. A firm can make investment in either of the following 2 projects. So there are 2 projects available. A firm can make either in project A or in project B. The firm anticipates its cost of capital to be 10% and net after tax cash flow of the project for the 5 years are as follows. So directly cash flows are given and the rupees are in thousands. Project A, 0 year is cash outflow, minus 500 is cash outflow. Then there are cash inflows. And project B, again, cash outflows and cash inflows. The discount factor are 10% and 20%. So they have given 2 types of factor, one 10% and 20%. Calculate NPV and IRR of the project. To find out NPV, we need a discount rate which is 10%. Cost of capital to be 10%. State with reason which project you recommend. Explain the inconsistency in ranking of 2 projects. So, I will be first starting with project A. Zero, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. What are my cash flows? Minus 500. 85, 200, 240. 220, 70. They are directly cash flow. I need to find out NPV. So present value at the rate of 10%. Find out present value at the rate of 10% of all this figure. Let me remove this minus 500 from here. Minus present value of cash outflow negative 500. Present value of cash inflow at 10%. So it will be 85 divided by 1.1 is equal to M plus 200 divided by 1.1 is equal to M plus 240 divided by 1.1 1 2 3 M plus 220 divided by 1.1 1 2 3 4 M plus 70 divided by 1.1 1 2 3 4 5 M plus. MRC is 616.60. 616.60. My NPV will be 116.60. As far as project A is concerned, I am doing it in calculator, so my answer might be somewhat different from the book because they have already taken a factor. So 1 divided by 1.10, they have taken 0.91. We might have taken up till all the digits which are available in our calculator. We also want to find out IRR. NPV is positive or negative? NPV is positive or negative? It is positive. If NPV is positive, the project is earning more than 10%. Sir, should I try out 12%, 13%, 15%? You should try out directly 20%. See, they have given the hint that you directly try out 20%. Is it all right? We are trying out with 20%. Present value at the rate of 20%. It is 85 divided by 1.2 is equal to M plus. 200 divided by 1.2 is equal to M plus. 240 divided by 1.2 is equal to M plus. 220 divided by 1.2, 1, 2, 3, 4, M plus. 70 divided by 1.2, 1, 2, 3, 4, 5, M plus. MRC is 482.83. 482.80 negative 500. My answer will be 482.83 minus 500. It is minus 17.17. Now I know that my IRR is between 10% and 20%. I will use that interpolation formula and find out IRR of this project. What will be IRR of this project? It is base rate, which I'll be taking it as 10%, plus positive NPV divided by difference in NPV multiplied by difference in rate. Base rate is 10 plus positive NPV is 116.60. Difference in NPV will be addition of both. It is 116.6 minus 17.7. $133.77 multiplied by difference in rate is 10. My answer will be 116.6 divided by 133.77 multiplied by 100 plus 10. It is not multiplied by 100, it is multiplied by 10. 116.6 divided by 133.77 multiplied by 10 plus 10. What is happening? (116.6) divided by 133.77 multiplied by 10. Yes, plus 10. It is 18.71. Is IRR of this project. What is my NPV? 116.60 or 17.17? What is my NPV? 116.60. Why I am finding out this NPV 17.17 negative is only to find out IRR. This is trial and error just to find out IRR. It is not a portion of my answer. It is just to find out this figure, which is 18.71. So project is earning more than 10%, but the project is earning 18.71%. You need to do similar thing for project B. 1, 2, 3, 4, 5. Cash flows are 480, 100. 70, 30, 20. First, I need to find out present value at the rate of 10%. Minus present value of cash outflow. This will come present value of cash inflow. Minus present value of cash outflow will be NPV. This all figures at the rate of 10%. So 480 divided by 1.1 is equal to M plus. 100 divided by 1.1 is equal to M plus. 70 divided by 1.1 is equal to M plus. 30 divided by 1.1 is equal to M plus. 20 divided by 1.1, 1, 2, 3, 4, 5, M plus. MRC is 604.51. 604.51 minus 500 is 104.51 positive is my NPV. Tell me if your calculator answer is different. If you have found out in calculator, if you have found out otherwise, then it is all right. In calculator, I am getting this answer 104.51 is NPV. I need to also find out IRR. So finding out IRR, I know it is earning more than 10%. I will be directly trying it at 20% because in question there is an hint given that you directly try out at 20%. So at 20%, my present value of cash inflow will be 480 divided by 1.2 is equal to M plus. 100 divided by 1.2 is equal to M plus. 70 divided by 1.2, 1, 2, 3, M plus. 30 divided by 1.2, 1, 2, 3, 4, M plus. And 20 divided by 1.2, 1, 2, 3, 4, 5, M plus. MRC is 532.46. It cannot be 532. Okay, it is 532.46. What is the problem? The problem is I am not getting a negative NPV minus 500. It is 32.46. Again positive. So my IRR will be greater than 20%. What is IRR? The rate at which NPV is 0. The actual rate of return the project is earning, which will be more than 20%. So I'll have to find out present value at the rate of 30%. And let me get one negative figure. Without getting a negative figure, you cannot use that formula. Why? First, you need to get the range that IRR is between this to this figure. If this both are positive, you cannot say it is between 10 to 20%. So I need to find out present value at the rate of 30%. 480 divided by 1.3 is equal to M plus. 100 divided by 1.3 is equal to M plus. 70 divided by 1.3, 1, 2, 3, M plus. 30 divided by 1.3, 1, 2, 3, 4, M plus. And 20 divided by 1.3, 1, 2, 3, 4, 5, M plus. MRC is 476.15. 476.15 minus 500. I will be getting answer in negative. 476.15 minus 500 is minus 23.85. One positive figure, one negative figure. My IRR will be between 20% and 30%. I can use the formula, find out IRR will be base rate plus NPV, which is positive, divided by difference in NPV multiplied by difference in rate. Base rate I'll be taking 20% plus NPV positive is 32.46 divided by difference in NPV will be 32.46 plus 23.85, 56.31. Difference in rate is 10. 32.46 divided by 56.31 multiplied by 10 plus 20, it is 25.76. See, we are not getting exact figure because the book has done more approximation. They have taken only one digit in that factor or two decimals in their factor. We have taken all the decimals which are in calculator. So our is more correct answer than what is given in the book. They have taken this factor. And this is only up till two decimals, right? We have taken up till all the decimals. I am summarizing the answer. Project A, Project B, NPV, IR. Project A, NPV is 116.60. It is always at 10%. NPV is always found out at discount rate. IRR is 18.71. NPV of Project B is 104.51 and IRR is 25.76. Now we are going to actual problem. This problem was just learning calculation of NPV and IRR. Yes, for learning IRR, this question can become somewhat good base because it is 5 years and some cash flows are given. You can practice how to find out IRR. But ultimately, we need to take a decision. Try to understand. Had you found out only NPV, what is NPV of Project A? 116.60. What is NPV of Project B? 104.51. I would have opted for Project A. I would have opted for Project A. What will be my decision? I should go for Project A. If you see the IRR, Project A is earning 18.71% and Project B is earning 25.76%. Had you found out only IRR, your decision would be project. But you are in practical life and you are having both the answers, and now there is a dilemma. You may select project A, you may select project B. Both are beneficial because both are having positive NPV. Both IRR is greater than required rate of return. So practically you can select either of the project A or project B. But which project is to be selected? Please try to concentrate. If there is inconsistency in ranking of two projects, what is the meaning of inconsistency? NPV says project A and IRR says project B, then there is an inconsistency. If there is inconsistency in ranking as far as the methods of capital budgeting are concerned, then NPV will prevail over IRR. NPV is a superior method to IRR because it considers variability in cash flows. And so whenever there is a conflict between IRR and NPV, NPV will always prevail. I will be selecting project A. What is variability of cash flow? I will tell you. Try to concentrate. Project A is having minus 500. So the cost is same in project A as well as project B. In project B also it is minus 500. So both are having same project. Try to just understand this. You will be learning in some of the you would have learned, or you will be learning in your capital structure. But try to concentrate over here. There are two types of investment, A and B. A is earning 10% return, 20% return, or 30% return. What is the average return? It might earn 10%, it might earn 20%, it might earn 30%. Simple average. 30 plus 20 plus 10 divided by 3 is 20%. So A is earning on an average 20%. B may be getting 0% return, 20% return, or 40% return. What is the average return? Again, still it is a 20% average return, right? So both project is having an expected average return of 20%. Still both are not same because the figures are different. By just seeing this two cash flow, my question is, which is more risky? Project A is more risky or project B is more risky? Let me give you the answer. If you invest in fixed deposit, your expected rate of return is 6%, 6% or 6%. If you are gambling, your expected rate of return is 0%, 6% or 12%. What will be average rate of return in fixed deposit? 6%. You are going to get 6%. What will be average rate of return in gambling? Will be again 6%. 0 plus 6 plus 12 is 6%. Which is more risky? Where the variability is higher. See here practically standard deviation is 0. Your standard deviation from mean is a 6. So once you find out standard deviation, you get a risk. Your deviation is more. See the deviation, 20 on upper side, 20 on lower side. 10 on upper side, 10 on lower side. The variation is 10% and 20%. Higher the variation is in return, higher is the risk. If variability in return is higher, higher is the risk. So you should select the project. If return is the same, you should select the project having lower risk. And you can just see the cash flows. See the variability in project B. 480, 20. In project A, there is a variability, but it is somewhat consistent, right? 200, 240, 220, 85, 70. Here there is a huge variability which will be considered by NPV but will not be considered by IRR. IRR will give you what actual rate of return the project is earning. All right. So please understand, this type of questions are asked n numbers of times. I have taken in classwork only one question just because all the answers are same. You just need to find out NPV, IRR and write down this statement. If you see your suggested answer, they say there is inconsistency in ranking of two projects due to variability in cash flow. In case of inconsistency in ranking based on NPV and IRR, NPV based decision making is preferable. So in this case, project A will be preferred due to higher NPV. This was C 5.1.6. Again, a simple question of 7th question is exactly 3rd question. By mistake, it is taken into this also. Just the format of the question is different. Figures are even same. It is exactly same 3rd question. 8 we have done. 9 we have done. 10 we are going to do. I think 10 and 11 are same. We are going to do this 5.1.12. MTR Limited is considering buying a new machine which would have a useful economic life of 5 years at a cost of 25 lakhs. Cost is 25 lakhs and a scrap value of 3 lakhs. With 80% of the cost being payable at the start of the project and 20% at the end of first year. This is something new. The machine would produce 75,000 units per annum of a new product with an estimated selling price per unit of 300 per unit. Direct cost would be 285 per unit and they are 5 years. And annual fixed cost. Direct cost would be 285 per unit and annual fixed cost including depreciation calculated on straight line basis would be 8,40,000 per annum. So depreciation is included in this figure, 8,40,000. So this is somewhat interesting. In the first year and the second year, special sales promotion expenditure not included in above cost would be incurred amounting to 1 lakh and 1,50,000 respectively. Evaluate the project using NPV method on investment appraisal, assuming the company's cost of capital to be 15%. What is the tax rate in the question? Not given. I am taking it as 0%. If tax is not important, even depreciation is not important, right? The depreciation is important just to find out tax benefit on depreciation. Sir, can't I assume tax rate to be 30%, which is a normal tax rate in India? You can. Your answer will be different. Your answer is absolutely correct. You will be getting 100% of marks. If tax rate is given, it is all right. If not given, you may take it as 0. You may take it as 30%. I take it as 0 because it will make my question somewhat easy. Useful life 5 years. I am first finding out cash flow from 1 to 5 years. The machine would produce 75,000 units. Units will be 75,000 per annum. Selling price of 300. Selling price per unit 300 and the variable cost is 285. So contribution will be 15. Annual fixed cost including depreciation would be 8,40,000. Alright. First I am finding out contribution. What will be answer of my contribution? 75,000 into 50. 11,25,000 minus fixed cost. Sir, should I take depreciation? No, you should not take depreciation. But sir, 8,40,000 figure which is given, it is including of depreciation. If it is inclusive of depreciation, then what I will be doing is I will exclude depreciation from it. Depreciation is by SLM method, which is included in 8,40,000. Let me remove that. 8,40,000 minus depreciation. I don't want depreciation. My tax is 0. I don't want depreciation in my question because I want only cash flow. Depreciation would be 25 lakhs. Scrap value 3 lakhs is 22 lakh divided by 5. It is 4,40,000 every year. SLM all the years, the answer will remain same. What is the fixed cost excluding depreciation will be 4 lakhs. So I will be deducting fixed cost only of 4 lakhs rupees, and understand as my tax is 0, there is no depreciation to be added. I will be getting directly cash, which is 7,20,000, which is a consistent cash flow from 1 to 5th year. Sir, there are other cash flows, we will be considering it, don't worry. Sir, can't I do this? Fixed cost I am deducting including depreciation 8,40,000. So 11,25,000 minus 8,40,000 is 2,85,000. Now as this fixed cost is including depreciation, so I will add back depreciation, which is 4,40,000. You can do this. The answer will be same, 7,25,000. Please concentrate on cash flows. Now if you are doing in this manner, believe me, the answer will become very easy. It will become logical. If you don't know this, every time you will have to prepare that 1, 2, 3, 4, 5 years, 5 columns. I have prepared only 1 column per year. 1 to 5 years. Cash inflow I will be writing down positive. Cash inflow I will be writing down positive. Cash outflow I will be writing down negative. 1 to 5 years I am having cash inflow of 7,25,000. What will be cash outflow at the end of 0 year? This is present value of cash outflow at the end of 0 year. The project will be costing 25 lakhs. But 80% of the cost is payable at the start of the project and 20% at the end of first year. So what is 80% of 25 lakhs? Will be 20 lakhs. 25 lakhs into 80% is 20 lakhs. 20 lakhs is payable at the end of 0 year. And 5 lakhs rupees is payable at the end of first year. This is what is given. See, it is possible. Machinery might be coming in parts and you might have to pay 20 lakhs rupees right now and 5 lakhs rupees after 1 year. After say installation, good working of machinery, you are paying additional 5 lakhs. So this is how your cash outflow happens. 75,000 we have considered, selling price, variable cost we have considered, depreciation we have considered. This point, we could have done 1, 2, 3, 4, 5, all 5 years, but we'll be doing this separately. In first year and second year, there is a special sales promotion expenditure not included in above cost would be incurred amounting to rupees 1 lakh and 1,50,000 respectively. So at the end of first year, there will be expenditure of 1 lakh. At the end of second year, there will be expenditure of 1,50,000. Instead of preparing 1, 2, 3, 4, 5, I will be finding out present value of these figures and adding it in my present value of cash inflow. The cost of capital is 15%. I will be finding out present value at the rate of 15%. I will be finding out direct answer. Believe me in this. Let me first find out this answer. 7,25,000. For you, it is easy because you are having GT. 1 divided by 1.15. 5 times is equal to GT multiplied by 7,25,000. I'll be doing it by M plus. 1 divided by 1.15 is equal to M plus 1, 2, 3, 4, 5. MRC multiplied by 7,25,000. It is 24,30,312. 24,30,312. Present value of this 1 lakh rupees. 1 lakh divided by 1.15. I need to discount it for 1 year. 86,957. 86,957. I have considered it separately. 1,50,000 divided by 1.15. 1,30,434. No, it is raised to 2. Huh? So it is 1,50,000 divided by 1.15 is equal to 1,13,421. 1,13,421. It is 24,30,000 minus 86,957 minus 113,421. 22,29,622. 22,69,000. Two 229,934. It is 22,29,934. My figures are correct or incorrect? They are correct. All right. Here, present value of cash outflow will be having a different case. This is itself a present value. So this will be 20 lakhs. This is not a present value. This 5 lakhs rupees is at the end of first year. So I'll have to convert it into present value. 5 lakh divided by 1.15. 434,783. 434,783. So my present value of cash outflow is 24,34,783. All right. I think we have forgotten scrap value of 3 lakhs. It will be cash inflow at the end of 5th year. This is what we have forgotten. At the end of 3 years, 3 lakhs rupees. It is positive. Huh? We are getting it. Scrap value. So my this figure will change. 3 lakhs after 5 years. So present value will be 3 lakh divided by 1.15. 1, 2, 3, 4, 5. 149, 153. 149, 153. 24 lakh 30,312 minus 86,957 minus 113,421 plus 149,153. 23 lakh. Still we are getting some problem. So what mistake they have done? They have taken, instead of 15%, which is given clearly in the question, they have taken 12%. So our answer is correct. 24 lakh 30,000 312 minus 86,957 minus 113,421 plus 149,153. 23,79,087. 23,79,087. My NPV will be 23,79,087 minus 24,34,783. 23,79,087 minus 24,34,783 minus 55,696. NPV is negative. You should not accept the project. Now every time you should not do this, that if the answer is based upon 12%, you change the question and make it 12%. Have a confidence. This is a correct answer if your discount rate is 15% instead of 12%. This clear, you should be absolutely clear in this case. Huh? At 12%, they are getting NPV positive. At 15%, we are getting NPV negative. So IRR should be between 12 and 15%. But that is not the question which is asked.